Hey folks, Dan Frio here, the Mortgage Update, and today is December 2nd, 2019. Happy December, and hope you all had a great Thanksgiving. So I want to start out on a different page. Usually when I start out on the mortgage-backed securities markets and see what they did today. And then I show you kind of what happened and what caused that difference or that adjustment in the mortgage-backed securities or at mortgage rates. So, like we always say in every video that we do, uncertainty in the market is good for the bond markets. In the bond markets, part of the bond market is mortgage-backed securities. That is the tool that creates or determines mortgage rates. Okay, so let's go through these checks that I always give you. The stock market down, well, that's a great signal for mortgage rates. Usually as stocks go down, people take their money out of stocks, buy bonds. Thus, they increase the price of the bond, driving down yields. And we'll get to that in a second. I'll emphasize that a little bit more. All right. Manufacturing numbers came in weaker than expected. Thus, a slower economy. Okay, so we have just these two things alone. What caused this drop in the Dow today? Well, tariffs. There's no deal with China, like I said, and I'm going to stick with this, is if we come up with something with China, it's going to be a long drawn-out process because there is a lot of differences there. It's not going to be just a one sign fix. So what happened is there's Trump is threatening to increase, or he's going to increase tariffs again. And this is kind of causing chaos in the markets. So between that and the manufacturing numbers coming in bad, stock market dropped. Okay, so this is usually great signals for mortgage rates. Coming up at the end of the week, we have employment numbers, which is going to show us how employment's going, and then we're also going to get an hourly earnings report to see how much people's earnings are going up, and if there's any concerns of inflation. But that's at the end of the week. That's going to be on Friday. All right. So that information is all bad. Tariffs, slowing economy, those two things coupled together. Okay. Let's reiterate what's happened. The Dow dropped 268. Why? Manufacturing data. Dow closed down 250. Why? Manufacturing. Trade concerns. All these things are pushing the Dow down. Usually that's what happens is, again, they pull monies out and you buy bonds. So here's a newsletter that I post every day. And if you would go into there, and this will give you some key points on what's going on if you're interested. If you're a mortgage loan officer, mortgage advisor, a realtor, anybody in real estate, this is something you should follow on a daily basis. And I usually post this. I try to post this at the end of each day on my Facebook, LinkedIn, and a couple other websites. So that's this data. So that's something to look out for that I post every day. Again, follow me on Facebook, The Mortgage Update with Dan Frio. Follow me on LinkedIn, Dan Frio, DANFRIO. Okay? So with all this information coming out, what happened to mortgage rates? Well, you would think, yep, they would have got better. The market crashed. The economy's slowing down. Everything's bad. Nope, rates went up. Why? I'll go back to what I said last week, and this is the new phrase I'm going to come up with is pigs get fat, hogs get slaughtered. There was a lot of profit taking today because last week we had a thin trading because a lot of people were on vacation. So between Tuesday, Wednesday, and Friday, we had a huge drop in rates. So hopefully if you're working with a mortgage advisor, they locked you in. If not, I don't think really anything's going to happen because of all the bad information that's coming out. But when we go through these numbers, the inflation numbers, the manufacturing numbers, and everything else, if I was a betting man, I would have bet we'd have a positive number today. Okay, so let me explain to those newbies out there what this number is. We follow on this channel the mortgage-backed securities market. What this is the component or the tool that dictates mortgage rates. It is not the 10-year Treasury, it's not the 30-year Treasury, it's nothing other than this tool right here, mortgage-backed securities. It's a bond that trades on Wall Street, okay? What we follow this on a daily basis. And just to go through it with you, everything trades in a range. Stocks, bonds, all of that. It has its technicals. If there was really no news out, it would just kind of bounce around through here. You'll see in certain areas there's big adjustments. And these days, something came out. Trump tweeted something, somebody bombed somebody. There were some big uncertainties or some great news in the market that pushed the market one way or another. So we watch in this channel the Fibonacci levels. These are kind of, think of them as bumpers when you're bowling. These are little bumpers right here. So we would trade in this region. Okay, so now to get a little more technical and to kind of dig down in this a little deeper or more focused, we start looking at 25-day moving averages, 50-day moving averages, 100-day moving averages, and 200-day moving averages. Let's get rid of the 200 just for now, so we can get kind of a little more focused in here. You're going to see most of the time these lines really play key roles. You'll see, let's just go back to here. We basically hit that number here, stopped. Hit that number here, stopped. Hit that number here, stopped. 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 So these are all things that we follow with a microscope. So what's going to happen tomorrow? Well, if it's a normal market where there's not a lot of uncertainties in there, we're probably going to be in this range here. Okay? Right in here. But what I do is I watch this on a minute-by-minute basis, believe it or not. So let me just go over how this works. So this is the price of the bond. Okay, when you buy a bond, you pay a certain price for it. As you pay more, thus the price goes up, your yield that you get on that bond because you're paying more for that bond drops, or the mortgage rate drops, the interest rate drops, the yield drops. Okay, so when the price is going up, yields are coming down. We want this thing to go up. We want a positive number. Again, this is the price, not the interest rate, the price of that bond. When it's going down, that's bad. That means rates are going up. You can see we had a great move right in here. That's a huge move. So if your mortgage advisor doesn't, or loan officer doesn't do this, they could have locked you down here. That rate might have been 4.25, 4.375, and you might have been able to get 3.875 a couple days later. This is why I watch this on a daily basis, and I take pride in doing this. And a lot of people follow my channel because of this. And I see a lot of mortgage companies, they're making their loan officers or mortgage advisors watch this and to kind of understand what's going on in the markets, because most people don't, half the loan officers out there don't know the mortgage programs. They just know how to cold call you, get your application, and throw it in the system. They're a loan officer. I consider myself a mortgage advisor because I help you pick the program, shop around, try to do this, work with your realtor if you're buying a house to try to work with them on different programs and selling techniques and things like that. And I also monitor rates, and I know my programs. There's a lot of programs out there. I can bet you, if you're working with a different loan officer, they don't know half the products out there, and shame on them. If they want to be a professional in this business, they should know this. So basically, my name is Dan Frio. I do the mortgage update. I'm a mortgage advisor in Chicago. I can do about 2/3 of the country right now that I'm licensed in. So if I can be of any help to you, please reach out to me. Follow me on YouTube, LinkedIn, Facebook, Google me. It's Dan Frio, DANFRIO of the Mortgage Update. So usually my radio shows are the Mortgage Update with Dan Frio. You can hear me in Chicago on WYLL Radio weekdays from 7:30 to 8 p.m. You can hear me on WIND Radio Saturday mornings from 7 to 8 a.m. If you'd like to reach out to me, please do. My number is 844-775-LOAN, which is 5626. Or shoot me an email at dfrio, F-R-I-O, at parksidelending.com. Thank you so much for watching. God bless you. Please don't forget to give me a thumbs up if you would. Subscribe down below and share the video if you think there's somebody else out there that you might know that might like this and find some educational information behind all this. God bless. See you tomorrow.